Hi Fools, welcome to Market Checkup, the Motley Fool's healthcare-focused investing show. I'm David Williamson and I'm joined as usual by Michael Douglas. Great to have you, Michael, on this rainy, nasty Tuesday. But we have a great show for you out there, so I hope everyone is excited. We have more earnings as usual and more M&A, which is really what we do. And we're going to touch on hepatitis C, so I'm sure Sovaldi will make its way into this show somewhere and we'll really hit just about everything we like talking about.
We should do sort of like a Where's Waldo? You know, where's Sovaldi on this show?
It's a bit of a Mad Lib for us. But let's start with market movers, because we have some big ones today. We've had about almost just one a day the last couple days, big outsized mover. We have two today, one good, one bad. I like my dessert first, so let's start with the good. Amicus, it's up about 20%. The firm announced positive results from a phase 3 clinical trial for a Fabry disease drug.
Yeah, fat storage drug called Miglustat. And basically, good news there. The firm's a little bit small for what we usually cover here at the Motley Fool, so I'm going to say, you know, something to keep on your watch list. I don't really have a particularly strong opinion on the company just because it is so small right now. So
yeah, I'm kind of with you. I mean, the results look good on the surface. Certainly, you know, kidney function remains stable, 18 to 24 months. Safe and well tolerated, which we like to see. But it is a smaller company. I don't think you and I have really dove into it before, so we don't really shouldn't really be giving too much advice on it. But you know, hopefully it's a nice up and comer. You know, the drug will make its way through the approval process. So this is certainly not the last we've seen of it, because it had a good phase 2 trial. And congratulations to Amicus investors. Let's move on to the vegetables, to the not as fun portion of this segment, which is Biota. Shares are down 30%. It looks like they have a halt on their flu drug. Right,
so they got a stop work order from the, well, it's called BARDA, the U.S. Office of Biomedical Advanced Research and Development Authority. So basically it's pending review for the company's contract for the development of a treatment for 2 strains of flu. What exactly this means for the company is kind of hard to say right now because management has said we really don't know why this stop order came down.
Yeah, it caught them really by surprise.
Yes, it seemed to, which is usually not a terribly good sign. That said, this BARDA contract is a big part of their revenue. So when you look at, since they run the contract in May of 2011, they've made about $51 million in revenue off of it, which is the majority of the company's total revenue since that time period. Actually pretty close to 60%. So definitely a pretty big contract for them, something that we'll want to be watching very closely and that their investors will want to be watching. The same drug, which is called lenacapavir octanoate.
It's a mouthful.
Yeah, I know, right? Marketed as Inavir, it's marketed in Japan with Daiichi, and they've got another drug called Relenza, which is marketed with GlaxoSmithKline, and they've got a mid-stage pipeline drug in human rhinovirus. Personally, my 2 cents is, since we don't really have a clear idea of what's going on here yet, let's if you've owned the company, hold. If you don't, stay away and kind of watch. Keep an eye on what's going on.
Yeah, it's tough because it's murky, right? We don't necessarily have any insight into what federal regulators are thinking, especially over at BARDA.
Yeah.
So and clearly it's going to be a really important decision for the company. They have some clinical trials ongoing as well, which could be a catalyst. But this is going to be a major overhang until it gets resolved. So I think that's pretty good advice, Michael.
Well, thank you.
All right, well, let's move on to our headlines, and we have some good ones. Headlines are really earnings.
Yeah.
It's earnings season. So let's jump right in. We got some more big pharma results today. Let's start with Merck. It was kind of a mixed Q1 for Merck. They missed on the top line, but they beat on the bottom line, which I guess ultimately is more important.
Right.
Shares are up about 3% on the news. Let's talk the numbers, and then we'll talk maybe a little bit about pipeline, which is where I think some of that 3% bounce is coming from today.
Sure. So, revenue top line is down, what, 4%, I think, to $10.2 billion.
Yep.
Non-GAAP earnings per share of 88 cents a share, which is about 9 cents better than analysts were expecting.
Yep.
I mean, so
that
you saw
was largely due to what? Cost cutting and research, I think.
Right. Research and development was down, I think, 17%, and then marketing and admin was down about 8%. So that's really what juiced the bottom line.
And I don't think that's necessarily Merck, cutting off their nose to spite their face.
Yeah.
Their R&D costs were pretty high, and they're reorganizing that department to make it a little more efficient. So, I think these are the gains of that plan. I wouldn't be, concerned that Merck is throwing, drug development
out the window.
Yeah.
Yeah. No, I'm with you. something we've been seeing with pretty much everyone, right? Generic competition, Singular's down 20%, Nasonex down 19%.
Yep.
No big surprises there. Some good news though, Januvia and Janumet on the diabetes side up 3%, 1.3 billion.
Although still actually a little lighter than where I think people wanted it to be.
Yeah.
So good news, but not quite as good as people were hoping.
Less positive.
Yeah.
And then you've got Remicade, the TNF blocker, for just a ton of indications, up 10% to 604 million. So some good news there too.
Yeah, and you know what? Guidance was reaffirmed as well.
Although when you beat and then you reaffirm guidance, people are like, oh, okay, so we're looking at more
let down the rest of the year. That's true. So let's move on to the more exciting part, which I think is the pipeline. That's why investors should be excited about this company. I've argued for a little while it was underrated. I think overall as a pipeline, Merck seemed like it was sort of a sleepier company, but they were working on these drugs, and it looks like it looks like the market's waking up to that pipeline. The stock's done pretty well. But let's not bury the lead here. It looks like Merck, of all companies, is going to be the first to market with their PD-1 drug, not Bristol Myers Squibb, who just went on a huge run when they showed the results of their immuno-oncology drug, nivolumab. This is Merck's version. Its code number is 3475. And it looks like they'll be filing in the back half of the year in melanoma for patients who failed Bristol Myers Squibb's Yervoy. Right. And there's actually going to be a head-to-head trial, though, that's going to come out later this year as well in July versus Yervoy. So that's their move to get moved up to a first-line indication in melanoma as well. So that's pretty exciting. They also have phase 1 trials in about 5 different forms of cancer that should be coming out too.
Right. Well, it's in like I think 17 different studies right now. So it's got non-small cell lung cancer, multiple myeloma, non-Hodgkin's. I mean, just a lot of opportunity there, conceivably, if the data continue to be good.
I mean, these PD-1 drugs are kind of, they're not a silver bullet. Like I don't want to oversell it, but they've had really strong, durable responses in those that have responded to it in a number of cancers. So I think they're just thinking, all right, let's try it in everything, and we'll see how it works, because we've seen good. We've seen good lung cancer results. We've seen good melanoma results. I think Bristol had some in gastric or kidney. I can't recall off the top of my head that was really strong as well.
Yeah, so definitely a chance to sort of look out, see what the market potential is out there. So something we'll definitely want to be covering moving forward. Of course, the other thing for Merck, as with it seems kind of all of pharma and biotech these days, is hepatitis C. Yep. And their all oral regimen, which is a combination of 5172 and 8742 for genotype 1, had a 98% cure rate at 12 weeks. Just like Sovaldi, we're looking at a once daily, one pill regimen,
which is really the key.
Yeah, for the sort of dosing benefit over, let's say, AbbVie, for example, with I think 6.
Yeah, 6 doses a day. 4 drugs, 6 pills a day.
Yeah. Now that said, their 8-week cure rate was 83%, which is not quite as good as Sovaldi's.
The 12-week was right about where you want it to be. So, I don't know if those.
How much of a difference will those 4 weeks make? Really?
Exactly, because the Sovaldi regimen right now is 12 weeks. They're not prescribing it for 8 weeks, so you're not. You can't argue, oh, the cost savings of Sovaldi is in those 4 non-prescribed weeks.
Right.
Maybe it'll move that direction at a certain point, and that'll be where they'll try to get a concession from payers who are pushing back on the price of Sovaldi, and they'll say, well, okay, it costs $1,000 a pill, but you can take it 4 less weeks, so it's not as expensive as it looks. But we'll see what happens. I think there's a lot of excitement about Merck's because it's late to the party.
Very.
Right? We'll be let's
probably
be
a couple years away.
But its profile is one that could compete with Gilead and possibly be priced, especially because it's coming late. They're going to really have to compete on price. Possibly be priced in a way that'll make the insurance industry and the pharmacy benefit managers, who are quite frankly freaking out over Gilead's pricing.
We'll break the country.
Break the country was a quote. Break the country was a quote. So that's going to be it's going to be exciting to watch. I expect the drug to move through. Generally, cure rates have been pretty consistent from phase 1 all the way through. So and that's looked good so far. And I don't see any reason why the FDA would reject it. We haven't seen any safety issues crop up either. So pretty exciting for Merck. We also have one last thing, actually 2 last things with Merck. One, we have the Improve It trial the Zocor versus Vytorin. That'll be out in September, so investors should be watching that. We also should probably talk about their consumer unit for a little bit.
Since they may be trying to sell it.
Maybe trying to sell it. You know, I said on CNBC the other day I thought this would be the next M&A domino to fall, at least in terms of big pharma. Just because it's a unit Merck is trying to divest. They're going to try to raise capital. And it looks like there are plenty of interested buyers. I mean, originally estimates were Merck could maybe get $10 billion for it, and then inched up to about 10 to 12, and now it's looking 12 to 14.
13 to 15 even.
Yeah,
so yeah.
Possibly 14 billion. And I think this is really smart. I know these companies may be a little hesitant to sometimes get rid of these famous brands that they've had for so long. But you know, when you talk about profitability, to be able to monetize that to the tune of 13 to 15 billion and put that into drug development, or go acquire some companies, I think that makes a lot of sense for investors.
Well, and especially when they've been looking at kind of slowly flagging sales. I mean, consumer care brought in about 550 million this past quarter, is down 4%.
Yeah.
You know, you're going to have to do something to turn that around. Or you could just sell it and take the big payoff. And so in this case, why not? Reckitt Benckiser has confirmed that they've been kind of talking with them and trying to figure out about buying up the business. And their consumer goods business is known for things like Coppertone sunscreen, Claritin allergy medicine, which I take.
Dr. Scholl's.
Dr. Scholl's, yeah. Well, and what's interesting is that Reckitt is the international marketer for Dr. Scholl's.
Oh, so that's a nice, easy fit for them.
Yeah, exactly. That said, I've also heard Bayer suggested as a potential suitor.
Yeah.
And Reckitt has said that they know that they're in a competitive.
Yeah. I mean, other names that have been thrown around were, I think, Procter & Gamble, Sanofi might have an interest, which we'll talk about in a minute as far as their sort of strategy. But yeah, I think Reckitt might actually be the most sensible fit. But we'll see. You know, it's probably going to go to the highest bidder. I don't think. I don't think Merck is concerned about who gets the best strategic fit, just who pays the most. So that's definitely what we're going to be watching, because I do think that's going to be the next big pharma deal to happen, despite everyone apparently trying to buy AstraZeneca. All right, well, let's move on to Sanofi, because we were just talking about them as a potential fit. They also reported first quarter results.
Yep.
I would say not as strong as Merck.
No.
We saw they missed on both the top and bottom line. It came in about 2% below the street estimates, and shares are down just slightly on the news.
Yeah, so I mean, and the thing is that they really emphasize the constant currency piece, because the euro is just so strong right now that they're just getting hammered for it. So
I noticed that too.
So like net sales were up, I think 3.5% in constant currency, but ended up going down to 7.8 billion euros just because of that currency issue. And they did something which I don't see that often. They actually broke out their EPS in constant currency versus their EPS as reported. So earnings per share were down from $1.21 euros to 1.17 euros, but it would have been up 6% in constant currency. So, so some rough news there.
Yeah, I mean, although it's not just that, right? Because Lantus was disappointing. This is the insulin. This is really their flagship product. It's the world's one of the world's best-selling drugs. It's been a monster, but it came in almost 5% lighter than I think people were looking for. Sanofi did reaffirm their guidance. Yeah. So nothing.
Sort of the opposite of the Merck problem, right?
Yeah, exactly. Where hopefully you'll get that better. And they're guiding for 4 to 7% earnings per share growth. So that's not too bad, especially given the state of some of the big pharmas out there.
Yes.
Lilly. There are plenty that would kill to have 4 to 7% earnings per share growth. I think the big news for Sanofi right now is some of the upcoming filings that they have. Especially we were talking about Lantus. U300 is going to be a big drug for them. That's the next generation version of Lantus. Lantus, of course, is going to face generic competition possibly very soon. Eli Lilly, he just mentioned, is working on a biosimilar. Now, we don't know about biosimilar pricing. There's a lot of suspicion that it won't follow the traditional generic drug race to the bottom pricing scheme, because there won't really be a lot of them. You can price it, maybe at like a 30% discount. And so that'll certainly hurt the profitability of Lantus, but it won't obliterate the market like traditional generic drugs do. But U300 is their next big drug. It's expected to do really well. It's going to be sold under the brand name Toujeo? Toujeo?
Something like that.
It's no Cyramza. It's no Cyramza. It is not. It's not a strong name. What can you do though? But the filing should be coming in the next couple months, so I'm looking forward to that. And then we also have their PCSK9 drug,
Alirocumab.
Yep.
And well, so you know, they had good phase 3 results. So you know, which they put out in March 2014. They've got 9 additional readouts coming in through the rest of the year. So definitely a lot to keep an eye on there. And they're partnered with Regeneron on this. One of my concerns, though, is they heard from the FDA some possible neurocognitive issues.
Yes.
And we still haven't heard much more about that.
And we haven't really, it wasn't really a class issue, right? Because we didn't see the same issue for Amgen, which is going to be probably the first to market with the PCSK9 drug.
Right. Although Sanofi did say in their call, they said something like, well, we are kind of where we expect the rest of the class to be. So
yeah.
I got the sense that the issue might be with the whole class, but we just really haven't heard much.
Yeah, or if it's worse with just certain ones than others.
Yeah.
It is sort of, it has cast a little bit of a pall.
Yeah.
Over
there's a little concern there.
Because these are never going to be the type of sellers that Lipitor and Crestor were,
right.
largely because they're going to be way more expensive, and they're not pills, they're injected, and they're really for just people who can't get their cholesterol under control with statins.
Right.
But they are all supposed to be blockbusters.
Right.
And so having your blockbuster sidelined because of some sort of vague cognitive issue, it's not great.
Yeah,
it's not great.
It's a concern.
We should be having some phase 3 trial data in the late summer, early fall.
Yeah.
And I think they still plan to file, by the end of the year. So that's definitely worth watching.
Yes.
As well.
Something we'll be watching closely here,
Yep.
I think.
And do you want to mention sort of their overall strategy at all?
Yeah, sure. So, I mean, well,
it's something we were talking about before the show. So.
Yeah, well, and one of the things I do want to point out, I really am impressed with Sanofi's strength in emerging markets. You know, I mean, like, it is the largest market is not Europe or the U.S., and that's, I think, something that's pretty impressive. And they saw some growth there, about 5.5% in constant currencies, of course.
Yeah.
So yeah, I mean, Sanofi has, well, as we've talked about before, they've spent a lot of time kind of investing in other companies, Regeneron and Alnylam.
Yep.
And they own 20% of Regeneron, I think 12% of Alnylam. And
well, they've been the big pharma that's been willing to embrace biotech.
Yeah.
And they did it early too with the Genzyme acquisition.
And they've done it pretty smart, it seems.
Yeah.
It seems to be paying off well for them. And what's interesting is, so just about everyone else, it seems, has been talking about M&A activity lately. And Sanofi, in their call, they basically said, well, M&A makes sense for some folks. We aren't necessarily going to change over to the mega merger model because we already have sort of the sense I got from them was that they have the sort of size and penetration that they're looking for in a lot of these markets, so they don't need to triple their oncology portfolio or something like that, like maybe Novartis is looking for with the Glaxo. Well, the acquisition of the part of Glaxo.
So, yep.
Or
what Pfizer is trying to do with grabbing AstraZeneca, yeah.
Right, exactly. So they seem to be pretty kind of happy with a lot of the market share where they are. I think they put it something like, we're 1, 2, or 3 in a lot of the markets that we're looking to compete in.
Yeah,
so.
And they may be trying to beef up their consumer health.
Yeah.
As some rumors out there, but there's not a whole lot behind that. And I think when you take a look at their model, right, I think it's smart. I actually really like it because they basically get these drug development deals. They find drugs that are interesting. There's less at risk than buying a company outright, and maybe they don't get 100% of the gains because they have to give off some good royalties. But they're getting the drugs that they want, and they're getting insight into these companies and their platforms, and they can license out other things. I know there's been some pressure for them to maybe acquire Regeneron earlier. Maybe they missed the chance to acquire it, but. Sure. But I don't think anyone at Sanofi's complaining about having a big stake in that business, essentially. Right. And you see Sanofi mentioned a lot, sort of acquiring or getting parts of these sort of standalone biotechs. Intermune was a rumor that came out today. I don't think there's really much behind it. Intermune has the IPF drug, Esbriet. It looks like the reports were just based off sort of a March Reuters articles that I remember we talked about back then. But nothing new, but Sanofi just gets mentioned in these sort of deals. I don't think the mega merger thing is their strategy. It never really, it hasn't been in the past. Pfizer loves mega mergers, right? That's what they do.
And they do it well.
And they do it well, yeah. But Sanofi does these licensing deals. I think there's less risk, and I think it's worked out pretty well for them. So I don't see any reason for them to change.
Yeah, I mean, overall, I think there's some good opportunities there over the long term. Obviously not exactly great quarterly news here, but definitely a lot that investors will want to keep an eye on moving forward.
Yeah, I think Sanofi has some interesting stuff in their pipeline. So, you look at them and you're not too concerned about a big patent cliff, and you're not too concerned about what's coming next.
Yeah.
It's pretty stable.
Yeah.
All right, well, let's move from stable to tumultuous, really.
Highly tumultuous.
Highly tumultuous, which is Allergan.
Yeah.
Which I don't know what's going to happen here, because it looks like we had the news. Valeant had that big press conference with Bill Ackman's Pershing Capital.
Right.
Pershing has about 10% of Allergan, and they basically announced that they would like to own the remaining 90%, and Valeant was going to try to acquire it. Now, both Valeant and Allergan are about $40 billion companies, so kind of a merger of equals, but really Valeant is going to...
In control.
Yeah, it would devour and rip apart Allergan, because that's what Valeant does. It does accretive deals, and it's really, really good about wringing out costs. I mean, I saw analysts saying cost savings for Valeant could be $2.5 to $3 billion. So I think it definitely is interesting. Allergan in response kind of freaked out.
Yeah, they adopted the poison pill and basically said, yeah, we're gonna fight this tooth and nail.
It was a pretty aggressive poison pill.
It was very aggressive. So of course there's been all this speculation. Well, are they looking for a white knight, or are they looking to acquire
someone else to be less attractive as an acquiree? It's sort of
right.
Are they going to eat someone else, or are they going to prepare themselves as a meal that they're comfortable being eaten as?
Serve themselves up.
Yeah.
We continue with the stuff. So which way do we want to go first? The being eaten or the eating stuff?
Let's start with Shire.
Okay.
Yeah.
Sounds good. So perhaps one thing that's been suggested is that maybe they could buy Shire PLC. And one of the benefits that Valeant in that press conference with Bill Ackman sort of purported to offer to Allergan was the tax benefits of not being domiciled in the U.S. And Shire is domiciled in Ireland, which has even better tax benefits than Valeant could offer. And so that could be a real opportunity for Allergan, potentially. And there have been sort of these rumors that maybe Allergan has reached out to Shire previously. Maybe something's going on here. We don't really know too much, because Allergan's not talking too much.
Yeah, and I think strategically it makes a good fit as well. Shire bought Vero Pharma for a little over $4 billion not that long ago. So you sort of take a look at their portfolio. I think the tax benefit is real.
It's huge.
Shire's got exposure to rare diseases as well. So I think that makes sense. This is sort of an interesting area where we've seen just a lot of consolidation, a lot of it driven by Valeant and other people reacting to Valeant. But Allergan itself, it's an attractive company, right? They're known for Botox. That's really their major blockbuster. But where did I see this? It's projected to hit $9 billion. The company overall, not Botox.
Okay.
Sorry.
I was about to say, wow.
Yes, $9 billion in 2018 sales. That's up from a little over $6 billion last year. So Botox is the key driver of that, but certainly not all of it.
Right. Well, and the thing that I just found really interesting when I was digging through their pipeline was just how many different follow-on indications they're looking at for Botox.
Absolutely. Yeah.
There's it's in phase 2s for osteoarthritis pain and premature ejaculation. It's in preclinical for depression. And so just some really interesting development going on there that I think we'll definitely want to watch.
Well, yeah, I think people know it for its cosmetic benefits, but really it makes, I think, a little more from migraines.
Right.
So it's not actually just a drug for the vein.
Right.
But I think when you take a look at, let's take a look at white knights. I guess who Allergan could be attractive to. Sanofi, which has been mentioned, I think, on every segment of this show so far, was mentioned. Also Johnson & Johnson. Of the two, I was looking. I thought Johnson & Johnson might make a better fit, just because of sort of where their business is. Johnson & Johnson is the #2 player in breast. You take a look at Valeant. They're right there actually with Allergan in neuromodulators and fillers. And then in ophthalmics, it's Novartis, actually, which is #2. So in some ways, I think Novartis, if you're looking for scale, that's the Alcon unit.
Right.
That actually might make more sense than Sanofi. So potentially interesting there.
Yeah, well, and some of the consumer crossover I think would make interesting sense at Johnson & Johnson. So
yeah, and Johnson & Johnson also has some ophthalmics as well.
Right, exactly. So I could see some good benefit there.
Yeah.
Yeah.
So it'll definitely be interesting to watch.
Yeah.
We don't really have an answer for you other than Allergan's going to do something.
Yeah, we will see what happens.
I'm sure of that. It won't just sit tight.
Well, I feel like it's a bit like the weather here in Virginia. If you don't like it, wait 15 minutes, something will change.
Yeah, and I guess if we're talking about this as an investment, I think if you're in, watch what happens. If they buy Shire, shares will probably go down. I don't know how much of a bidding war there'd be for Allergan. Valeant has definitely shown that they're willing to walk away from deals. Cephalon is a great example. They let Teva come in and buy it at a price. Valeant only does accretive deals, really. Generally, I mean, immediately accretive deals. Sometimes they'll put it off for a little bit, but they have very strict price requirements. So, I wouldn't buy Allergan hoping there's going to be some sort of giant bidding war between, a hedge fund and Valeant, on one side and Johnson & Johnson on the other. That's not going to happen. It's going to be interesting to watch. If you like Allergan's underlying business, and I think it's a pretty strong business,
yes.
I think that's a good reason to invest. I don't think you should invest just because of all the chaos around the stock necessarily.
Right.
All right. Well, thank you, Michael. Thank you for watching. I hope you enjoyed today's market checkup. We'll be back tomorrow with more earnings. I think we have Bristol tomorrow.
Yep, and a bunch of others.
And a bunch of others. So stay tuned. It'll be a good show. Thanks for watching, and Fool on.